Thank you. The International Monetary Fund says China must make critical economic reforms urgently to deal with its rapid but unpredictable growth. The IMF says China's economy relies too heavily on investment and credit as growth slows in the world's second largest economy. The effects are likely to be felt in Africa. China is its biggest trading partner, and the continent could be vulnerable if Beijing starts to stutter. Joanna Partridge reports.
An economic machine that's slowing down. China's GDP growth slowed in the second quarter to 7.5% year-on-year. Beijing expects the economy to grow by the same rate in 2013. Impressive anywhere else in the world, but China's slowest pace in 23 years. The impact will also be felt thousands of miles away in Africa, as China is the continent's biggest trading partner. Economic analyst Ali Khan Satchu says the effects may be even worse than expected.
It's going to hit Africa quite hard, in particular those countries which have got a very deep trade relationship with China. And they're not difficult to spot. They're like Angola, they're like Zambia with the copper.
Beijing wanted access to Africa's oil and minerals to feed its booming economy. In return, China's built roads, railways and pipelines. China's trade with the continent surged from about $10 billion in 2000 to $166 billion in 2011. In Africa, China's been seen as an important counterbalance to Western influence. But as the relationship matures, there's growing discontent in Africa that it's exporting raw materials while having to spend heavily to import consumer goods from the Asian powerhouse. And Africa has growth plans of its own. The Africa Development Bank expects the economy to expand by 5.4% in 2014.
We're in this period of catch-up that China did 10, 20 years ago, that India, Brazil all encountered a few years back. This is Africa's moment. So I expect Africa now to grow quicker than China.
As China's slowdown is likely to lead to falling demand for raw materials, analysts say the key for Africa will be to find ways to wean itself off its dependence on mining exports.